Good evening. I'm Dan Fitzpatrick at stockmarketmentor.com, and it's November 15th. That's Tuesday. Now, the Fed reports whether they're going to hike interest rates tomorrow. I think with the CPI that actually showed some inflation, even though we don't really see it in the commodities or the basic materials or the metals and mining index, still the CPI showed some inflation. Excuse me. That's going to give the Fed, a good ammunition to say we're raising rates. And so that will be good for financials, right? For banks, because when money costs something, then all those folks who take in deposits can loan it out and actually jack up rates a bit more. So CBOE is a financial stock, but they don't really do that, do they? So here's the thing. This stock, and I mentioned this definitely yesterday, might have even been last week, but I don't think so. I'm looking at this as a potential short. See, because this was in a channel here, really good channel, and then you get a breakdown. And if you haven't looked at last night's video, please check it out, because this is just the next in a series. It's kind of like Homeland, only nothing like it. No Brody here. So you get a breakdown and then a rally back up where? Back up to this breakdown. And this is a big 3-day reversal. And this pattern here, this is a star. You could say it's a shooting star, but it's actually not really for you candlestick aficionados. But the bottom line is this was where the stock had found support. Well, now you've got resistance. You've got more resistance overhead. So what I'm suggesting you do is watch how this stock behaves tomorrow. But if it rallies up a bit more, the idea is you want to short into that rally. Wait for the stock to roll over a little bit. But you short into that rally, and then wherever you short, you put a buy stop slightly above that. I don't think there's much of a chance of this thing blasting right through all these levels, but just to short the stock because Dan said, hey, this might be a good short, that's a recipe for disaster. You got to manage your risk. So the idea again is you look at a broken stock that rallies up to the point where it broke, and then as it falters, that's when you short. You don't want to short a stock that's broken, that's already falling down a lot, because at some point, the guys that were smarter than you, who shorted from higher levels than you, are going to be covering. They're going to be buying. You don't want to be shorting stock to those guys. Okay, so anyway, hope that helps, and watch for Jumpin' Janet and the Jelly Beans tomorrow. It should be quite a dance. I personally am bringing the popcorn and the red licorice whips. I'll see you there.